All right. Welcome back, everybody, to Altcoin Daily. My name's Austin. This is the price of Bitcoin year to date, starting in 2020. We started the year right here in 2020 with an ascension of higher lows, 6,600, 6,900, 8,300, and where we hit a few days ago at 9,500. Higher lows into an ascending higher highs. Now, I want you to realize this. Since we entered 2020, since we popped back above the 20, the 50, the 100, the 200, all these EMAs, we have never spent more than 8 days in consolidation between local highs, the swing lows, into our next leg up. Meaning that we've seen these pullbacks. Corrections are a part of any healthy bull market, but we've never spent more than 8 days consolidating before we passed the local highs into our next leg up. This is the day chart. You can see this for yourself. Actually, our longest consolidation phase was actually 20 days. We saw our next little local top at around $8,400. We spent 1, 2, 3, 4, 5, 6 days only until we broke past that into our next leg up. And where we are right now, when we saw our wick up as high as $10,468, it took 1, 2, 3, 4, 5, 6, 7. Right now, we are at our 8th day where we're still consolidating. Now, we saw the day close a few days ago as low as $9,583. Right now, we are at $9,708, and it looks like the bulls may be ready to take a little run. We are in our 8th day of consolidation. I can't see the future. I don't know what Bitcoin's price is going to do tomorrow. Neither do you. But with the halving 80 days away, I'm not waiting. I'm buying. Now, let's say that we do pull back, because if you'll notice, we are flirting right now with the 20 EMA at the moment. If we do take some legs down, we have these local lows, we have all these EMAs now acting as support. Every day that we consolidate more, these EMAs get closer and closer, higher and higher, I should say. I like that. Let me know your thoughts down below in the comments. First piece of news. Binance is not under our jurisdiction, says Malta regulator. So Binance may have just been caught in a pretty major lie. Binance, it turns out, is neither licensed to operate, nor is it regulated in Malta, the country's chief financial watchdog has just said. The Malta Financial Services Authority, MFSA, issued a statement Friday denying it had ever regulated Binance or that the exchange has ever had leave to operate in the island nation's fledgling cryptocurrency industry. And Binance has always said, we are a Malta-based cryptocurrency exchange. We are regulated in Malta. That's our jurisdiction. Maybe not. Citing reports in the media that referred to Binance as a Malta-based cryptocurrency company, the regulator announced Binance is not authorized by the MFSA to operate in the cryptocurrency sphere and is therefore not subject to regulatory oversight by the MFSA. And if you remember, Binance announced it was opening an office in Malta back in March of 2018, soon after it clashed with regulators in Japan, where the exchange had previously attempted to establish a presence. I guess maybe they never officially did the paperwork, but I guess it isn't clear if Binance still has an office in Malta. And you know, whether they have an office or not, the regulators are saying that they're not registered under them. I don't know. I'd be careful because this means that it's hard for the US or the UK or any major financial district of the world to allow its citizens to use Binance because their citizens could be taken advantage of if an exchange like this is not regulated. You tell me what you think, but this is pretty revealing. Next piece of news. E-commerce platform Shopify has now officially joined the Libra Association. Shopify joins the Facebook-backed stablecoins governing council a month after Vodafone quit the project. And this is interesting because we have only been seeing companies quit the project right here as you know, the US government has a problem with allowing Facebook's Libra to launch. Well, e-commerce platform Shopify, which has a ton of active users, is saying we want in. Canadian e-commerce platform Shopify has joined the Libra Association. It joins companies including Coinbase, Spotify, and PayU as a member of the nonprofit organization, which manages the Libra blockchain as well as running validator nodes on the network. Now, the big question is, when everybody else wants out, why does Shopify want in? Well, in a direct tweet, Shopify spends a lot of time thinking about how to make commerce better in parts of the world where money and banking could be far better. That's why we decided to become a member of the Libra Association. So in their mind, Shopify and Libra, they're trying to do the same basic thing, which is making money and banking easier for everybody. So this is a green flag on maybe why Libra is not dead. Maybe it will launch. The minute I get more information, I'll let you know. Next piece of news. The SEC has dropped the hammer on another altcoin. Enigma's $45 million initial coin offering has now been officially labeled an unregistered security. Now, if you hold Enigma, if you got involved in Enigma during their ICO, the SEC is allowing harmed investors to claim a refund from the token sale and has also charged Enigma $500,000. So just be aware, this isn't the first, this will not be the last altcoin that the SEC goes after, but now that Enigma is an unregistered security, at least the ICO was, what did it do to the price? Took a little dip, 5-6%. We bounced back right now, but Enigma is still valued at $24 million, so it's not dead. But now that the SEC is on them, Enigma will now need to officially register its token as a security. This means they'll have to give, quarterly reports to the SEC on how Enigma's token is doing. And the SEC has accused Enigma of misleading investors. If you don't remember what Enigma is a project focused on providing privacy for decentralized applications, dApps. Here's a quote from the SEC. All investors are entitled to receive certain information from the issuers in connection with a securities offering, whether it involves more traditional assets or novel ones, said John T. Dugan, Associate Director for Enforcement in the SEC's Boston Regional Office. In a statement, the remedies in today's order provide ICO investors with an opportunity to obtain compensation and provide investors with the information to which they are entitled as they make their investment decision. Now the question is, will investors automatically get their money back, or will they have to ask and fill out paperwork? I suspect they're going to have to ask and jump through a lot of hoops to get your initial investment back. But if this is you, I'm going to link this, just follow these backlinks and get your money back. Next piece of news. Brave Browser Basic Attention Token is going head to head with Google. Brave files a formal request seeking to topple Google advertising monopoly. This is a true David and Goliath, meaning that it will be hard to bring down Google like they now have officially filed the paperwork to do. But Brave Browser believes that the RTB, real-time bidding market, can be balanced out if the UK authorities enforce the GDPR, General Data Protection Regulation. So this is specifically in the UK. They're going after UK to enforce the GDPR, which will end Google's monopoly. The crypto-powered browser has submitted a formal request to the UK Competition and Market Authority, CMA, emphasizing the repercussions of failing to enforce their own laws, the General Data Protection Regulation. So they're saying Google is in control of everything. How do you guys allow that? Check this out. Google's unfair advantage. The CMA, the Competition and Markets Authority of the UK, had acknowledged Google's unfair advantage in their interim report published last February 2019. In a direct quote, Google and Facebook have a competitive advantage because they collect a large amount and a variety of data types from their widely used consumer-facing services and their broad coverage of third-party sites and apps. The data sets these companies own and control are orders of magnitude higher than every other competitor, both in quantity and quality. But more than that, Google exceedingly combines all these data from all of its services its users are connected to and to use this data for whatever means they can profit with no limits. So clear competitive advantage with Google. Brave believes that enforcing the EU's data protection and privacy laws would fix the per impression basis ads market by nullifying Google's unfair advantage. And that is the video for today. My name's Austin. Like always, see you tomorrow.